Okay, and we are live. How's it going, Roy?
Going well. I see that you got the memo to have like a green gray again. We match again. I don't know what this
This
is.
is actually really weird. I swear to God, guys, we did not plan this. It's just some weird telepathy. That's
Yeah.
I didn't notice
Yeah,
that the first time around.
yeah, I'm color impaired enough that they look pretty much identical. I bet that they're like slightly off. Yours looks lighter, maybe slightly, but yeah, it's funny. Um, Speaking of, yeah, this is of course not a fashion stream. Surprise, surprise. I know when you tune in, you'd be like, "Man, fashionable guys." But instead, we're here to talk the markets, and of course, we have a lot of topics to cover. There's been a lot that's happened from last Friday when we did our Fiesta Fridays show to today. The markets are always moving. So tonight we're going to talk about, of course, this rally, whether we think that's going to continue or not. We're going to talk about Amazon for sure. Apple, of course, had a big day with WWDC. They revealed the next version of Siri. There were some announcements related to Amazon, some related to NBIS and APLD and other data center type of plays. So we're going to hit all of that and also talk a little bit about the SpaceX IPO that's coming up this Friday. Tevis, where do you want to start?
Wherever you want, man. I'm free game. I'm in a good mood tonight. We can start wherever you want. I'm just gonna set
Okay,
up our notes here on the side.
we're then going to start with CoreWeave versus Nebius. CoreWeave outperformed Nebius today, and the only news that I saw was related to the build out that's happening in the UK for Nebius. It's been odd because previous announcements that have been, at least for the last few months, have been received very warmly by the market, and Nebius has rallied. Is there something more I'm missing, or is there something with that individual announcement that actually caused it to fall? While IRN was actually up substantially, CoreWeave up a little bit, APLD up a decent amount.
I didn't read too much into it, man. Like, there's gonna be days where Nebius underperforms and CoreWeave overperforms. CoreWeave historically, like, it's trading at the cheapest valuation out of all of them right now, in my
Yes.
opinion. And
Yes.
so, like, it's due for a run up. They were trading in sync halfway through the day, and then Nebius sort of tanked a little bit. I mean, Nebius had news as well. Did you see the UK commitment, Roy?
Yeah, that's what I was referring to. Is I was thinking that that was the only thing that I saw, and it seemed like when that was announced, the market took just a little bit to figure it out, and then it just said, you know what, no, and it didn't, tank or anything, but that was the only driver that I saw. So it was a curious thing. I
Yeah.
didn't really understand why the market would react negatively to it. It seemed like, I mean, like if you're in the data center place, if you're not expecting capital expenditure, I don't know what you're expecting. You're
Mhm.
probably in the wrong investment. So, was there anything particularly that was bullish or bearish, or do you think it was just like, hey, maybe Nebius is a little bit ahead of itself as far as a stock, and that's all it is?
Yeah, I didn't read too much into it. I mean, look, there's also the short interest to consider. Like Nebius was up 5% or something to that effect in pre-market, and then it just dumped as soon as the market opened. So that could be a part of it. Um, yeah, I'm not looking too specifically. Interestingly enough, there was some speculation around June 9th for Nebius. Maybe I can pull up some of the actual posts here, but there was some speculation. I actually have a post that I made about it around June 9th for Nebius. I don't know if the news that we were gonna get was the news that we got earlier today on the UK announcement, or if we're actually gonna get news tomorrow. But let me see if I can find it, and I'll pull it up for you. The June 9th piece. It's just like the
Yeah.
management team is just hinting at stuff. I don't know if they were hinting at the UK announcement though. That could be it. Yeah.
While you're pulling that up, if you can throw this up real quick, this came after hours. Applied Digital APLD, which is a large data center. It's smaller than the big three that we talk about, but it's, I don't know if it's fourth largest, but it's I think it's top five for sure. When I was doing a lot of research around this over the last couple of weeks, I'm like, yeah, it seems pretty decent. What really interested me with this is, they actually secured a 15-year take or pay contract. So it's the same kind of structure as what CoreWeave has done. where I think all of them have some take or pay contracts. CoreWeave has a ton of them, and these again, just to remind folks here that may not be aware, this is very common for energy infrastructure like gas and oil, where you have based on known revenue, and this is very known revenue, take or pay 5.2 billion. You take a loan out against that, but yeah, this is just a pure take or pay contract. Pretty large increase for them as well, so it was running a little bit. I'm not looking to get into it necessarily. It's just something I'm going to keep my eye on there.
By the way, great video on CoreWeave. I'm halfway through it, the CoreWeave Nebius video and the scenarios that you run through. I think that does a really good job of explaining it. Yeah, I don't know. I got to find money from somewhere to buy CoreWeave. I really don't want to sell my Nebius. At the same time, I have June 12th 260s. So if those get called away, I might just let them, quite frankly.
Yeah, that would be a 30% increase from here to Thursday. But yes, it makes sense. Yeah, like, and the bottom line of that video is not necessarily to say that this model, well, this isn't this model, but the debt versus dilution model, it's not that one is inherently and always better than the other, that there are edge cases where one is vastly superior than the other, but for the most part, depending on the scenario, one is better than the other slightly. It's not like a massive differentiator. And I think that that's what the market is overhanging. So with this, like APLD news, the take or pay, like the more common that those sort of contracts are, the more that people that are just focused on gas and energy hopefully will chime in and be like, yeah, this is a known thing. You shouldn't be scared about this revenue. Like take or pay is they're getting paid this as long as they're able to deliver. That's like the one contingency. But they're going to get paid no matter what. So it's a guaranteed contract. It's actually better than prepayment. I did look into that a little bit more too, because you brought up a good point on Friday.
Yeah, look, I think if you really believe that the demand is going to be resilient and robust over the next 5 to 10 years, then the model that CoreWeave is running is higher upfront risk today for potentially higher reward in the long run as their build out gets completed. So it's just a different model. And I think that's something that I'm sort of wrapping my head around more, even though the interest payments look freaking scary. If you don't think that the demand is going to fall off a cliff, it's well priced in. And
Yeah.
keep in mind that Nebius here, Roy, any day now is going to be maybe doing more sort of asset-backed raises or more dilution potentially through their ABS program that they haven't tapped into.
Yeah,
we'll see, right? They raised CapEx, and we haven't seen where that money has come out of yet.
Yeah, I think most people, except for maybe a few diehard Nebius bulls, have seen that over the last week or so, Nebius, has gone in outer space, and like that's an opportunity. That's one of those, not even like an edge case. Like it's awesome for Nebius in two ways. Like one for shareholders, like congrats, and then the other is if like Nebius stock for nothing else changed and it just triples. Most companies are like, it doesn't really change anything. If they aren't planning to raise money. For a company that's hungry for money for capital expenditures and their model is around dilution, the better the share price action has been, the vastly superior it is. Now, it works the other way too, but the reality is we're in a bull market, and a bull market that really understands inference. And with that, there's some other inference news that came out, our data center news, related to one of your holdings. I believe you still have Amazon. They had a pretty small raise. It was interesting. They actually issued it in Canadian dollars for 14 billion in Canadian. It can be upsized as well. And it is just, again, specific to what's happening with everything else in this space. So this is, of course, not the first time that Amazon has raised this year. They've taken on 70 billion in debt. I think it was 200 billion that they're aiming for CapEx this year. But a lot of that is financed through free cash flow. So,
trade down?
Pardon?
Did they trade down on this news? I didn't even see Amazon price action today.
I'm not sure when it came out exactly. I saw it like when I was eating lunch. So it did fall. The stock did just a little bit. So, yeah.
Yeah, I don't know what they're doing with Canada, but after Google opened the doors and Meta rumors, like Amazon was bound to be next.
Yeah. Yeah, and they did a raise previously, like they in March, I believe it was a euro that they raised it against, and they're just doing so 1.15% above benchmark. So, like if you're contrasting like what these guys will be paying out in terms of interest from this raise from unsecured notes, they're in much better shape because of their free cash flow and their revenue than CoreWeave. So it's not like if I was an Amazon investor, I wouldn't be scared or nervous about that. I think that this, like, just because we're in data centers and inference and plays like NVIDIA that benefit from this, the demand is just relentless and obscene at this point. Just it surprises even me. Like I knew that the market was underappreciating it, and I still kind of feel like it's maybe still underappreciating it, despite all the announcements over the last few weeks, especially with Mag 7. All the data centers are coming online. Yeah. It's a good place to be for NBIS, CoreWeave, IREN.
Look, man, I think you timed it the best. You doubled your CoreWeave position on Friday, and you're already up today. So you're chilling out there.
Yeah. Yeah, Mamba says it's not dilution. You're correct. This isn't dilution. They have diluted in the past. This is specifically just debt. So they're doing this through unsecured senior notes. So they don't convert into shares. That's what the unsecured means.
Well, I mean, look, I think the takeaway there is that if they felt as though their stock price had gotten ahead of itself, they might have diluted, versus if they feel like they're still undervalued, then it doesn't make sense to dilute versus to take on debt. I don't understand why they didn't want to just use cash on hand. They got way too much of that already, but I guess they're using it all for their CapEx spend. Like, I don't understand why they would raise debt versus just spend cash. I guess cheap financing.
They're spending a lot more than what their free cash flow actually generates. So let me just pull this up so we can see. I haven't looked at them. Yeah, I almost misspelled Amazon. I was like, wait a minute. Okay. So we'll look at financials, and we're just going to look at, actually, I think that the estimates for CapEx should be pretty on point. I don't know how many analysts actually cover it. Yeah, there's enough that do this. So if we look at this on an annual basis, yeah, they're at $200 billion is the estimate through 2026 for capital expenditure. And so then if we look at their financials, well, actually, let's just look at estimates since we're doing estimates. Free cash flow estimate, and they're probably going to be pretty close because it's a pretty well-known model. Somewhere, well, yeah, they're negative. And it's because of the capital expenditure. Like, it's one of the things of capital expenditures, but they're not going to be negative forever. 2028 is looking quite rosy, even if that's a little optimistic, just because they have more build out than expected. Let me do a better measure here. So let's do free cash flow, and I'll just do this right there. And yeah, on an annualized basis, last 12 months is negative again because of the capital expenditure, but they were previously, like, to 2025 when they accelerated their CapEx. They were generating about $32 billion in free cash flow. That's amazing. But when you're spending $200 billion, it's got to come from somewhere. So my guess on it, that's a good question, Tevis, on why they would do it this way. And if they're just going to do a little bit at a time. I think they realize that shareholders are okay with some capital raise, and a raise like this, $10 billion for a lot of companies, they'd be like, what in the world are you doing? That's a crazy amount of money. For Amazon, it's like, oh, not that big a raise. Like, that was the market's reaction. It's flat today. And I think that they might just kind of, because their raise that they had back in March was lower than most of the other hyperscalers. I think that they're just going to sprinkle it through the year, do it in a variety of ways, not try to spook the market.
Yeah, I mean, like, look at how much money Amazon makes. Like, what did they make last quarter? Like over 80 billion, something like that. Like 10 billion is a drop in the bucket, for these guys. And they probably got some amazing rates on that debt as well. Quite frankly, I kind of wanted them to go bigger. And I'm sure they still might. I mean, Google had 10 billion just from the Buffett investment alone of their raise. So all of them, I think, are going to be double dipping very shortly. I don't know how the market is going to be taking it, right? Because last time they announced CapEx, every one of them sold off, every single one. And the market's still a little bit gun shy around CapEx. And we saw this with with Meta, right? Meta is still bearing the brunt of their capex decisions, even though that's like fully within their control. Dude, I saw Meta was down today, trading under $585 at that range. And I'm just like, I got a text from a friend, and he's just like, is this like a full port moment for Meta? And I don't have the heart to tell him no, because like what they're getting. Let's just say Meta goes to 500, right? What are they going to do? They're not going to go to zero. They're just going to come out the same thing that they did in 2022, and they're going to say, hey, we're going to actually cut our spending for XYZ. Back then it was the metaverse. Today it's going to be, AI capex, let's say. They always have that bullet in the chamber to do that. And the moment they do, the stock rallies 30, 40, 50%. I mean, in the case of 2022, it rallied multiples higher on the back of them being a little bit more fiscally conservative. And right now, they're spending to be able to make money in the future, but they can always reel that back if they see the need to do so. So the sell-off for Meta is just completely unrealistic in my mind.
Yeah, we've already been here before, not to the extreme that it was back in 2021. But yeah, I'm not a Meta shareholder. I'll never be a Meta shareholder. Well, I can't say never. Like it'd be hard to not get greedy if something like absolutely stupid. Like it's not going to go to $50 a share, but even there, I would be tempted to compromise my values and make some money. But I do it in a very public way and be like, hey, but it's cheap right now. It's hard to look at that and say otherwise. But I think it's just to tank my performance in that stock picking competition that we did, which ends fairly soon. Because I picked Meta. I was like, hey, I would only do it in this kind of sandbox environment. So let me pick Meta, and you're welcome.
Yeah, I think you're the only one that's negative on that thing. I mean, I'm pretty much right there with you. Who killed it was Chris, Neil, and Manuel.
Yeah.
It's the guys we got to listen to, Roy. Us just two airheads, we just have a show. Meanwhile, these guys are making the real money.
Speaking of air, no, just kidding. There was a fireside chat that was pretty cool, but yeah, we won't necessarily go into it here.
You didn't have air test systems by the time when we had our challenge, right? Like you would have definitely.
No, it was just barely on the radar, not even in the invest and investigate. I was just like, let me put that in the things that I need to look at, and then I did, and I'm like, oh, well, bummer. But I'd rather win with allocating in my portfolio than some competition that doesn't really mean that much. So, yeah. So Amazon also, let's see, I think had one other piece here, and it actually tied into, there's a couple of pieces, but I'll just share this one that it was interesting. So Corning is one that I do see some others that are playing for the AI build out, and these are tied into some silicon photonics, but a lot of the CoWoS manufacturing. And so Amazon and Corning, which I didn't know that was a ticker symbol before today. I'd heard about the stock. I think Emit is in that one too. They announced a multi-year, multi-billion-dollar agreement to expand U.S.-based optical fiber manufacturing. That's silicon photonics, or it's tied to that, for Amazon's growing data center infrastructure. And so it's a $10 billion investment there. So they're building. There's a cost to that in the short term. Maybe the market doesn't like it that much, but it's the right approach for them.
Yeah. Amazon is one of those positions where I definitely want to build up my position again in Amazon after my shares got called away, because right now I only have the spreads. But here's the flip side, Roy, is now that the stock is back down to 250, I could just also add to the spreads position. It's a little bit more risky, but I mean, look, they're 2028 spreads, 230, 280s. It's limited because the upside is limited if I wanted to hold Amazon longer term. But this is sort of like what I'm rattling around my head. It's like, do I just go ahead and add to the spreads, or do I just write cash secured puts and get back into shares with Amazon? Either way, I want to increase exposure.
Yeah, I personally like it when I have all the exposure that I need as far as shares, and I want more. That's when I'll do leaps as a swing, and I'll just take profits or losses along the way. And so I'm almost at that with with CoreWeave that if we fall, we're trading in the 80s, mid to low 80s. Like I don't really have room to add because it's above the 10%. I wanted a nice even number of shares so I can sell options against them, which I know I'll probably get burned by. But I'll actually add some leaps if we go a little bit lower here, and we might. But yeah, for Amazon, like if I was in your shoes, I would personally just buy shares, just make it easy because like that's one of the companies where we have an advantage as retail, especially if we're not like on the cusp of retirement or something like that. Where let's say Amazon does nothing for 2 years as far as a stock, the company's doing great things, it just sits there. Your leaps are dead. You lost a lot of money, but if you're like, hey, I'm buying Amazon, I'm planning to hold this for like 10 years. Is there a scenario that's realistic that Amazon is worth less or proved to just be an opportunity cost in 10 years? Yeah, but it's like a really small percent chance. It just,
yeah. Shares are the more safe way to play it.
But that's not how you get 100% year-to-date gains in your portfolio, is it?
Yeah, it's like, do you know me? If there's a safe way to play it, I'm going to find a way to bastardize it.
Yeah. I want to take a look at Apple right quick and then talk SpaceX. And I see a lot of great Q&A questions, some on Nubank. I see some as well on Meta and some other questions as well. But with Apple, of course, WWDC, they debuted a lot of things. I only saw the Cliff Notes and then I watched all of the Siri stuff. And so today was the day that they relaunched their Siri product. It is in beta. There was some confusion on that, and I think that's maybe why initially the market reacted this way. This is a 2-minute video. Is it cool to go ahead and play this, you think?
Yeah, just demonetize this, Roy. It's all good.
Well, I can
no,
hide the audio.
Let's play it. Just put a full screen out.
And intuitive with a brand new design that reflects the power of Apple intelligence. Let's take a closer look, starting with how Siri is a much more capable assistant. I want to get right into it and show you a few things that you can now do with Siri in your day-to-day. Let's start with something simple but super useful. Say you heard about a local concert. When's that Suki Waterhouse show in SF? Siri can draw on current world knowledge to ground its answers to your questions. Okay, looks like the concert is on July 26th. How can I get tickets? Okay, you have to enter a lottery to get the tickets. Remind me to sign up when the lottery opens. Okay, got a reminder. Now let's hear one of her new singles.
Cut it here.
Reminders, music.
Yeah.
Like,
That's
you know what I love
probably
about Apple, Roy, is that they've had the longest lead time and their product is still the most dog shit product out there. It's just like, dude, how the fuck do we live in 2026 and this thing can't even talk back to you? Like, that is just like that demo just killed a deep side of my soul where he was just like looking at his phone. He's like, okay, I got the information. Let me convey it to you. And then he's just like asking more questions. Like, that's just, I'm not surprised Apple was down today. I'm surprised it wasn't down more.
So I actually have a little bit different take. I'm not an Apple bull. I've been pretty hard on Apple, and I still think I'm right to do so. They did have, if you watch the full segment, it interacting with the voice, and they're like, oh, look, it can change voices and stuff. Like, this is a great product if they demoed it in early 2024. They're 2.5 years too late. The first voice that they had, which I think is the default voice, it was so robotic and wooden. It's the worst AI voice that I've heard, I think, since 2023. And then they had like they showed where they could change voices, and those weren't actually somehow as bad. But yeah, like this was incredibly lackluster. I think that really what happened though with the share price, you can see it intraday that the shares rose up in expectations for this event. And I think it was just sell the news. It's a classic thing. Yeah, exactly. Apple is really far behind. Now, do you think that this is a catalyst for further downside for Apple? Do you think it's just like, hey, Apple's like way far ahead of itself because it's trading over 30 PE from a forward standpoint, including present standpoint? They've largely punted on the AI game, or is this good enough? And I'll let you go first, but I'm going to share my take as well, which might surprise some people, actually.
Lord help me if you say that Apple is undervalued. I don't even know what to do with you anymore. Dude, this company is like, their biggest innovation in the last 3 years was socks for your iPhone. Like, I think every presentation that they do that's consumer facing products, they showcase how far behind they truly are, and that whatever price they're selling at right now is too expensive for Apple to be selling at. Don't get me wrong, the actual technology that they have, the M series chips, the capacity, and just in general, their hardware engineering capabilities, I think, are very undersold, and very compelling. Their walled garden is absolutely the reason they're still alive right now. The consumer side of their business and the innovation that's coming out of there is just, it's not even a shadow of the Apple that you remember, or even the Apple that Steve Jobs was around for.
Yeah. And throw up Jack's comment. Jack, thank you for the donation, $10. He said, after staring at options premiums on NBIS for months, I couldn't believe how cheap leaps on Apple seem. So cheap. Bought some. Apple always thumps me. Yeah, like the reason why that a lot of the premium for leaps, so if you're doing a long-term equity position, some of it's tied to theta, but a lot of it's tied towards IV, so volatility, so how much the stock has moved recently. And if it hasn't moved much for a while, if it's fairly stable versus something like a Nebius, you're going to get seemingly cheap premiums. And really the question is on those, like you have to ask, like, is there something that's a catalyst that you think will bring the stock further upside? And or is there something that's going to increase volatility? Because even in that scenario, you'd be a winner. But yeah, this is one where, from a valuation standpoint, let me throw this up. It's going to actually, we know it's expensive, and it's really not growing in terms of revenue. This is the forward price to earnings. So the all-time high that it's ever been was during COVID, 36.8, and we're sitting at 33.72. One of the highest levels that they've ever had at the end of 2024. They were also up for some reason, I'm not sure. Yeah, this, for a company that, if we look at like the revenue and everything, unless you're expecting clear revenue acceleration, it's well ahead of itself. Let me pull up actually the financials, and yeah, total revenue percent change. We'll just do that on a separate chart, and let me make sure it's quarterly. All right, yeah, I mean, the revenue is increasing. It's 16%. It's not where it was back here at negative or pretty flat. But it's still, like, if you're looking at Mag 7 investment, we did that ranking a while ago. I don't think we'll redo it tonight, but maybe sometime in the future. But like, Apple would still sit at bottom for me. I don't understand. Yeah. But on Siri itself, okay.
So just one thing real quick. Like, yes, guys, we get it. Apple is still very dominant. All we're saying is, we are talking about the potential for them to continue compounding on the back of their product lines, not how they've got here. Everybody knows how they've got here. We're talking about where could they potentially go and what could get them there. Yeah. And I think this is also a good point as well on the Siri integration. Like, this was always my bull case with Apple. If you remember when I bought Apple, was it 24 or 23? This is the reason why I bought them. I said, I mean, we can roll back the tape, but I was like, Roy, Apple has not come out with their AI strategy yet. Apple has everything about you, all of your information, all in one place. If they leverage that data and have an AI on top of it, it can be the most powerful real world application of AI out there. So absolutely, I think that's still relevant. It does require a level of execution, however.
Yeah, it like actually. So I'm not interested in Apple as far as an investment or anything, but I think that what they showed today was bullish, Tevis. Even though, yes, it's lackluster. If you're comparing it with anybody else in the market, it's not great at all. Like, they're way far behind. but it is better than whatever they called Apple Intelligence 2 years ago. I know it was Apple Intelligence, but man, it was so terrible and not well integrated at all. And just what that commentator said, like they're absolutely right. Like the integration within their ecosystem is what's important here. And so you're not. I think the market, if it's selling off just for this reason, I think it just might be a classic sell the news running up to the event type of thing because the stock acted like it. But I think if the market is or begins to sell it off just because of this release, it's absolutely wrong. And the reason why is we can't compare this model with everybody else because that's not working in their walled garden. But instead, what you need to compare it with is the current iteration of Siri. And so I have one person in the family that actually has an iPhone and that has Apple products. And I asked them, I was like, hey, what do you think of Siri? And they didn't have anything good to say. And most people that I know that own iPhones, like they're pretty underwhelmed with Siri. And classically, Apple has been able to, on their hardware side with their iPhones, come out with features that were already released out on Androids, 2 or 3 years ago, and people are like, "Oh man, it's amazing, it's great," because they're just gonna buy an iPhone. They don't care about what anyone else is doing. They're just excited when they get the features. And Siri is just like that. This is a lot better, from my understanding, than the current iteration, and so that will help with some of the stickiness, which they weren't already lacking, and it'll also help with that integration feel. I think people get very excited with this, and also for some Tevis, I think that this might be their first interaction with AI. I know that we kind of live in a echo chamber where everybody, vibe codes and everybody's building. But the reality is there's a ton of people that have barely scratched the surface with AI, and they're waiting for it to be easy and integrated on their device. And Apple will, I don't know if I would say nail the experience, but it's going to be at the very least good enough. And that's a good thing for Apple. Now, the other part that was interesting, and this actually relates to some others of the Mag 7, there is a lot of cyclical revenue and partnerships, but when you get to this scale, it's hard to consistently find those outside, is this right here. Amit covered this, was an announcement earlier in the day with Apple, Google, and NVIDIA teaming up for the compute side of this. And so previously, Apple has had their own private servers, and what they've ended up doing is working with Google and NVIDIA for its private cloud, and it's not using Google search. I thought that was a pretty important piece, that they actually use Apple Foundation Models, AFM. So it's a good thing for Apple. Like, they punted on a lot of these things. They're not needing to build out their infrastructure, but the good thing is they're really not running the risk of the other Mag 7, which I think is sustainable, but they're not spending $200 billion in CapEx. Maybe they should, but yeah, they're not going to. Yeah, June, I think you said it right. Apple is the good enough phone. It's the good enough stock. Like, I'm not expecting it's going to go down to like 15 price to earnings or something silly like that, barring we're in a bear market. But yeah. Now,
what's next, Roy?
SpaceX. SpaceX is supposed to IPO this week. We talked about it previously. I thought there was an interesting take from Ron Barron in the way that he was playing it. I am going to do a more full video, just, I hope I have time for it, just to warn people, or so that they at least know what to expect. We talked about a lot of this also on Friday too, but he has a large conviction. Of course, he has been a Elon fan for much time. Actually, I don't think I have the audio. Let me pull that up and share the tab here. So it's not a small position, and he'll tell you exactly what it is here. Will Baron buy additional SpaceX shares at the IPO price?
Yes. I've given an order for $1 billion. And they said, well, how do you come up with $1 billion? I said, well, the company, we now have $15 billion, and the company's valued for 1.25 trillion. So we own about 1.25% of SpaceX. And if you're going to raise $70 billion, and I don't want to be diluted, then we need to have $1 billion. That's where I come up with a number. And there's so many people who are huge money managers, people with 2 trillion, 3 trillion, 1 trillion, they don't own a share. And the people who own, who have $7 or $8 trillion, they own way less than they can. So you have huge demand coming from people who don't own enough and have to own more. And then you also have these indexes where passive investors have to invest in those indexes, whether they like it or not. If they're going to duplicate an index and you have a new company coming into the index, they got to invest in it. So you have demand coming from investors who don't own any and want it, and are large cap growth investors. They have to own it. And then in addition to that, you have people who are going to be trying to duplicate an index, and they have to own it too. And then you have people like us who say, boy, I have never in my life seen a business like this, and I haven't. Then they have to own it too. And you have to own it for us. I've told my son, I say, Dad, don't say never. But I can't imagine that I'm ever going to sell my stock in Tesla, in SpaceX.
Or Tesla.
Or Tesla.
Great. Thanks, Ron. We're getting a lot of questions on the potential merger of SpaceX and Tesla. Do you think that's realistic or pure speculation?
That's not that big of a promise because I am 83. But I'm not selling my shares in my lifetime, I don't think. And you never say never. Michael Baron says never say never. But so many things in front, I can't imagine leaving. So I'm not selling. In fact, as I mentioned before, we're trying to buy another $1 billion worth of SpaceX stock in this offering. And I'm not a trader. I'm just an investor, investing in businesses that are run by people who I admire, who I trust, who are really smart, great leaders.
Will Baron buy?
And yeah, so massive amount, $1 billion order. He said he's not selling in his lifetime, which, I mean, he is in his 80s, like he said. There's $2 billion in there already previously, as early as 2017. So they're up massively on that. And he was projecting in the interview 300 million subscribers in, let's see, it was within a decade, making it worth 14 trillion, trading at the 14 price to sells, which, I mean, like, you can speculate all you want. And so, his idea basically is, the way he's playing it is large investment initially, and then you just hold it. And like, honestly, if somebody was going to play SpaceX and they weren't a trader, they're just like, I like the company, the TAM is immense, and it's an Elon company, I want it. I wouldn't go all in at the IPO necessarily, but like, that makes the most sense of just like, okay, I like what they do, I want part of this company, they're going to be bigger in 10 years. Okay.
Slightly different take. First of all, what a masterful way to dodge that question. Just pretend he absolutely didn't hear and ramble on about what he was saying in the first half.
Yeah.
I genuinely was like, is he okay? But look, man, I think you got to call it like it is. Ron Baron is like mega wealthy. The $1 billion he's buying on the open will make zero material impact in his life, whether he sells, he doesn't sell, anything in between. He's not the same as like a retail person aping into SpaceX at all. And the other thing to call out is like, this dude has been investing in SpaceX since the early days. He's made a ton of money on Tesla and also on SpaceX because he was a private investor in both of them. And so it's great that Ron Baron is Elon ride till I die, but that doesn't mean anything for your retail investor because they can still get caught up in this and lose a lot of money because they don't have the privileges that Ron Baron has. They don't have the capital that Ron Baron does. For a lot of retail investors, maybe $25K that they put in SpaceX is the difference between them having an emergency fund or not. For Ron Baron, he could lose $1 billion tomorrow in his fund. It literally goes to zero, and he won't feel it personally, and neither will his family feel it. And so I think we're talking about two different games here, because one person is investing for fun, let's call it, and they can absolutely never sell a single share and die with them still holding, and it gets inherited and whatever, because their life is not riding on their portfolio performance. It's not riding on the capital that they roll out. Versus for a retail investor, a lot of them, it is, unfortunately.
Yeah, and I think people will make money on this, like if they do one of two things. If they end up selling and taking whatever penalties come with it in that initial pop, almost all hyped IPOs, and this is a very hyped IPO, do very well that first day, like very well. And then the second day is usually when that sell-off really accelerates. And that can last usually for a couple of quarters, not always. But, you know, like if you're doing the Ron Barron approach where it's like, hey, it's money I don't need anytime soon. I'm going to put in there not expecting anything, but like 10 years later, like you're not saying that 10 years down the road, SpaceX will still be under its IPO, are you? Or do you think that? Because there are people that think that. No, okay.
No, I don't think that at all. I think SpaceX will be, it'll do very well over the long term. We'll see how it does over the first 6 months of like how rocky is that initial offering going to be. That's not the point. The point is like people take the word of these guys as gospel, and it's far from the truth because their life circumstances are drastically different from the life circumstances of every single person that's viewing this. Like everybody that's viewing this, maybe let's say 99.9%, to just give the benefit of the doubt. None of these guys that are viewing this were on any of those yachts in the Monaco F1 this weekend, right? And meanwhile, it's like a whole different caliber of people. Like, do you think any of the people on the yachts at F1 this weekend cared that the portfolio was red on Friday or that the market was down on Friday? Like, genuinely, nobody cares because it's like if I have $10 billion, if I lose $1 billion tomorrow, it's gonna kind of suck. But like, I'm sure I can get by with $9 billion. You know what I'm saying? But if you have 100K and you lose 10K, you're like, oh boy, I got to start, like you're operating from a place of reactive fear as opposed to a place of like complete and utter, disregard because you've already made it. You already like, if you liquidate your portfolio, like you'll still live a very lavish lifestyle and never have to think about money ever again. It's just a different caliber altogether. And so I never really put too much weight on whenever anybody like, these guys are saying, because A, they're talking their book, and B, it's just like, hey man, this is a different circumstance. Like you had JP Morgan and all these guys, the investment banks who are like, oh yeah, like this is another way to value SpaceX. And they're bending over backwards to make the valuation make sense. And all I could think about was like, God, they are going to dump the living shit on retail the moment that this thing IPOs. Sorry, pardon my French.
Yeah. And insiders, will later, probably not so much Elon, but there's plenty of others. This is one of those, like anytime a company explodes this much in terms of private valuation, but then it becomes public, there's a lot of people that are just regular welders that, I mean, maybe very good welders that now have life-changing money, and they will not all, but a lot of them will absolutely sell because like if you're set for life and you're not at least taking some profits, like your risk tolerance, I don't know what that is. So, but no, like this is one where, yeah, I think the valuation is extremely generous. IPOs are not set up to benefit retail. We've talked about this is one of the few things I actually agree with Chamath on, where IPOs are just structured and retail is at a disadvantage if you participate in it for the most part, unless you're able to get in it as an accredited investor when it's private previously. But that isn't to say like if somebody buys and holds it for 10 years, like I don't think they're going to be mad at themselves. They might be like 2 years out from here for sure. But yeah, I'm not looking, I've got a few shares. You have a few shares. Well, I asked for a few shares just for fun. I don't know that I'll even actually sell those. But it's not a meaningful amount of money, if I even get any. It's supposed to be oversubscribed, so we'll have to see what that looks like. Are you interested, if it does its normal phenomenal rise and then it crashes over the next 6 months, are you interested at some price in getting it in SpaceX? And if so, do you know what the valuation would be?
Well, so if I get allocated, I'm getting in on day one, and I'm probably going to get out on day one or day two. And aside from that, I think it would need to fall. I don't even know, man. I acknowledge that it's always going to trade at a premium. I just don't know how much of a premium. I haven't looked at their prospectus in depth. Like I know the ratio between how much they're making and what their growth rate is and how they're making money versus what their valuation is. And yes, they are landing a lot of compute contracts, and that's like really making a difference in terms of their revenue to valuation ratio. But I just don't know how much of it is froth and how much of it is actual substance.
Yeah.
So let's just be conservative and call it a 40% drop from IPO.
Yeah. And that's one of the things I'll be wanting to figure out, because like there's a price, which I don't think that SpaceX will get to, but I need to figure out that price of where I'd be interested in actually entering. Because I do think, like, I think most people looking at it are like, yeah, great company, valuation doesn't make any sense. Friday, yeah, it's going to be very entertaining. Very entertaining.
Friday,
So,
SpaceX edition.
Yep. All right, ready for Q&A?
Yes, I am ready for Q&A. I am ready for Q&A. We got 24 questions that are bookmarked right now. Feel free to ask your questions as well. Of course, we are going to start the Q&A with DeepSeek's AI. Since he donated $2, he skips the line. Where do you see Marvell going from here? I mean, if Jensen said a trillion, DeepSeek's.
Yeah, it was one of the best performers on Friday, I think it was, and it performed decently well today too. So, but yeah, I don't know the company well enough to say. It's up almost 10% today, so it was down actually on Friday. So,
did you see that Jensen also said today buy Qualcomm? I don't know if you caught that or not.
I did. Yeah, I had that clip ready, and I'm like, well, but
what did you think of that?
I don't know. I'm not sure. Do you think? Okay, let me hear your take, because it's one of those things where like I listen to it, I'm like, sometimes I hear something like that, and I'm like, okay, I need to look more into this. And with Qualcomm, I'm like,
you know what the funny part? I'll give you my take in just a second, right? You know what the funny part, Jer, is about this is like DeepSeek's AI has a portfolio that's like well into the millions, just given what he's publicly said on this podcast around some of his positions. These are like massive positions, and he donates $2 to every streams just so I can actually struggle to say his username. It's entirely the reason why he does it. It's entirely it. Okay. What do I think of Jensen pumping stocks? I think it's emblematic of the market that we're in. I mean, he didn't really talk about stock prices at all. I don't know if you saw him. Was it a clip on Thursday? I think so, where he was talking about, I don't know if it was Qualcomm. It might have been Marvell or one of these other guys. And he was just like, buy the stock. The stock doubles every couple of weeks. So keep buying it so it keeps doubling, kind of thing. And then he even also mentioned it in the Qualcomm thing. He was just like, oh, like I do more selling on other people's stocks than my own. And just like, dude, like, how about don't tell people to buy the stock, you know? Like, I get it. And sure, it can be a naivete, like him coming from a place of like, oh, well, he's just saying if you like what they're doing. But like a lot of people will misconstrue that, and like you don't necessarily have a fiduciary responsibility because like you're talking about other people's companies or public positions, and you're not necessarily giving away any MNPA. But at the same time, Roy, like you kind of do, because you are a well-respected voice in the AI space, and you have the power to change a lot of the landscape based on your investments. And by the way, you are also profiting your own company's investment portfolio by talking about it. And you just know that people, especially uneducated, retail people that are not AI experts, are going to listen to Jensen's words and take them as gospel. When he says buy Qualcomm, they're going to buy Qualcomm. When he says Marvell is going to $1 trillion, people are going to bid up Marvell. And so to some degree, you do have kind of a fiduciary responsibility, or at least, just a common sense type of responsibility to the shareholders. But I mean, they're public markets at the end of the day. If he's not breaking any laws, then it's just a gray area. That's my take.
Yeah, Matthew said, if QCOM doesn't work out, can we sue Jensen? I didn't hear this isn't financial advice. I mean, maybe. Like, you can technically sue anybody for anything. Would you be successful? I don't know about that. Pull this up, please. This is Qualcomm stock where it's been trading. Obviously, it's been on an extreme tear since April, up almost 100%. In hindsight, that was a time to buy. But if you look at this company now, if we look at the estimates here on revenue, it's not a fast growing stock. And so unless the analysts are just all wrong on this company, it's overpriced for where it's at. I don't know. I'm not that interested.
I mean, that's because you're a scrupulous investor that does his own homework. A lot of people, dude, hell, I was thinking about FOMOing into Marvell or Qualcomm because Jensen said it. Like, even me, I was like, oh, I should buy some call options on this shit. Because, like, dude, if Trump comes out and he says buy Nike, I'm gonna be buying Nike stock next. Because, like, this dude is like the boy who cried wolf. Like, he's done it so many times now that it's just like everything has gone up. And like, I hate the fact that I'm saying that out loud. Please don't follow that. Don't do that at all. But at the same time, Roy, like, what do you make of these public figures that are well respected, that their voice carries reason, let's say, that what they've told you to buy has gone up consistently without fault? They're going to tell you to buy the next thing and you're going to buy it. And like, that I think is like somebody's going to get caught there, in a bad way, because this thing's going to pump and dump, and then there you go, it's done.
I think that at some point the SEC might step in, and we'll see investigations, and then we'll see people being a little bit more careful. I think the better approach, like, I don't love it when a public figure like that's like, hey, buy this stock. That's scary to me, and it doesn't matter who's doing it. I prefer the approach that like the CEO of Air Test Systems does, and a lot of other CEOs do too. If they're excited about a company, they talk about the fundamentals of that company, not price to earnings or anything like that. Just like, yeah, these guys have this incredible edge, and they're doing this in the space. That's valid. That's great. Yeah, it costs $100. Sorry, but the reality is that. I don't know. It just feels like we're dancing on a line that I don't think should even be come close to. Like I saw today when I posted something on APLD, Applied Digital, in the after hours. Somebody had responded there. They're like, I was talking about the gigawatts capacity, the unsecured senior notes, and everything. And there's some parts of that where if you're like, hey, I get it's a data center, it's going to be bigger, good. But they had said that they understood none of it, and they were just happy that they bought calls. It's like, oh man, like. You have to be careful, even if you're following Jensen Huang into some comments or Nancy Pelosi. Build your own due diligence. Don't just take somebody else's word for it. It's really, really important because sometimes they just want exit liquidity. I'll just say that.
Well, I mean, that's where the SEC would get involved. I mean, right now they're just saying buy it. But like, Jensen was actually really careful, I would say, with his words in the past, because, and like, he had like, I mean, I don't know if you saw Qualcomm, but it was only up like 2% or 3% last time I saw it. Not a lot, but if you remember, the first thing that Jensen said flat out buy just pumped. What was it? Was it SanDisk or Micron? I think it might have been. Yeah. And the reason is because like this has been the sequence of events. Things pump when it's at GTC, or things go up on a slide. So like NVIDIA, Heart, Nebius pumps on that, right? And then the second sequence is like on a slide, plus Jensen talks about it. Okay, that'll pump. But then GTC is like full of slides with logos that Jensen talks about all of them. And so the third sequence is when Jensen literally was like, buy it. And that he only says that after a period of like talking about the work that they're doing and where they're going and this and that. And now we're at this like fourth sequence where he's just like, go buy the stock. It's doubling every week because if you guys keep it doubling. And I'm just like, like, we're getting into a slippery slope here, man.
I think I don't know. Like, I think that's if another content creator said it, I would be like, dude, like, you're gonna probably get sued. And if not, you probably should be very careful in the future. And whether you're the CEO of the largest company in the world or not, laws are laws. Now, I know how laws actually work, which is, the elite don't get hit with the same scrutiny, but it doesn't mean that you're above the law. Like we saw, although I don't know if we talked about this. Andrew left from Citron. Did we talk about him actually being indicted with? Okay, yeah,
We should.
we absolutely could. So this was this last week or the week prior? It was recent though.
Last week.
Pull it up here. Want to make sure I'm accurate on the indictment and everything. And then his response was hilarious too. So, yeah, here we go. And I'll pull up his response. It's great. But this is why you need to be careful. Like, okay, so this is a short seller, and the guy, like, if you follow him or if you've known about him for a while, like especially since COVID, the guy's a jerk and he's not well liked. People actually really hate this guy, and not just because he shorted GME back in 2021. There's a lot of reasons. Like he's one of those guys you root against. So, but that doesn't mean that this will happen just to those guys and not to other people that we like. And so the jury actually found him guilty of a securities fraud scheme and 12 of 16 other counts as well. Maximum is 25 years in federal prison. Usually it's about half the time that they actually serve if they are on good behavior and so forth. And essentially what he did was he misled on price targets. He said, hey, we're bullish on, like one of the examples was NVIDIA. He said, NVIDIA is a buy. It's going to go to this price target. We have a large position. And then on a 5% spike the next day, they sold their entire position and would do things like that time and time again, basically rugging retail. And so they said, nope, absolutely not. This is not good. Let me pull up Citron here. And this is hilarious. So this was from the 1st, so just a week ago. Today I was found guilty, amongst other things, for recommending Tesla, NVIDIA, and Meta back in 2018. Good companies to recommend, but that's not why he's been indicted. Not once did anyone say I lied. The government's own agent admitted it on the stand. There were no false statements. So now a truthful opinion that ends up making money is illegal. Is this America? And of course he got community noted because the DOJ alleged false misleading statements. There was also actually a number of other notes as well. He was called out in the comments. Citron buys NVIDIA, and then you sell 100% of it 2 hours later.
I love
he
how
had
he
it
says,
coming.
this is not over, just like as he's getting walked into prison. Like, sure, it's not, it's not over.
Yeah, all that means, in legal speak, is that he's likely to appeal, which if you're facing 25 years of your life behind bars, you need to appeal if you're able to. But maybe he'll get some things reduced and everything. We'll see how it plays out. I do kind of agree with this point, though, that there are others, like Muddy Water Research is one of those, where they seemingly and knowingly had published information that they knew was misleading and inaccurate regarding the accounting statement. They kind of walked it back, and then they said it again a month ago, and I'm like, are they trying to get sued? SoFi even said themselves they were interested in that they were inquiring with lawyers or something like that to see whether they should sue them or not, which they probably shouldn't. But people have done worse than this guy. He's not going to be the only one that goes down. And even though we're in a little bit more fast and loose scenario right now with public officials saying things that they shouldn't, probably about stocks, still, I think the SEC is going to continue to indict people or charge people, and then they'll be indicted by the jury.
Yeah, I mean, SEC is too busy fucking going after YouTubers for FTX, and meanwhile not going after politicians who have been doing this shit for years and years. I don't know why I'm charged up today. Maybe it's because I came from a protest straight to this podcast, but I don't know. It's yeah, sure. Let's hope the SEC does more.
Yes. It's funny because, 3 years ago, I was like, man, I wish they would do less under Gary Gensler. And they have. And most of that's good, but some areas I'm like, come on. It's a little sketchy out there. Yeah, and it just bugs me, because there are people that will just follow folks in, not do any due diligence, and then they'll just be exit liquidity. And it's just, yeah, they should do their own research, but man, I don't like that.
I just think, Roy, that you can always tell what part of the cycle we are by how on the nose the manipulation is.
Yeah. Sadly. All right, Q&A.
Yeah, continuing Q&A. So, dude, I haven't seen a single UFC fight since I left Canada at the end of May. A single one. And I don't think I will be seeing a single one until I go back in the probably mid-July-ish. So I might miss the White House UFC fight. It's just like, it's way too late for me. It's like 4 a.m. my time, 5 a.m. my time. I'm not going to wake up for that. I'll watch the highlights. Okay, let's continue. Am I back? No, I'm not back yet. And I'm not going to be back for a while. Actually, fun fact, I'm probably going to be in Italy next week. And an Italian viewer was like, let's grab lunch. And I was like, let's do it. So
Nice.
that's always going to be fun. Tevis playing calls on SpaceX. Totally something you should do. Full portfolio better than NBIS Dolt. Thank you, Real Estate Wiz. I am not playing calls on SpaceX. I might be playing shares on SpaceX, and we'll see. Was Tevis out riding? No, man. Like, people are just marching. I think it's for a good cause. I think, Roy, it's so inspiring to see. And I actually went out and I've been out now multiple times. These marches are getting international news coverage. I got a friend from Japan reach out to me. He's like, dude, what the hell is going on over there? Like, what are you guys doing? Basically, there's this whole foreign. Do you know what's going on or no? Not really.
I saw what you and the other gentleman that's in the message feed were sharing. So
yeah, so there's like there's several resorts that I mean, right now it's like the Kushners are linked to that they want to turn into like resorts for ultra wealthy elite people, and it's one of like the last ecological sanctuary areas in Europe. But it's not even about that, I don't think, because there's been a lot of foreign investment in the country over the past couple of years. I think it's overall just the fact that a lot of these deals are cut behind closed doors and people have no real benefits from them other than being priced out of their own markets. And it was so inspiring to see, Roy, because each of these marches is getting like 300,000 people to 500,000 people on the high end. It's day 9 right now, by the way. Every single night for like 4 or 5 hours, everything's blocked out because you just have these massive marches. And Roy, it is all young people, all 20-somethings, 30-somethings. And just to put into perspective for you, 300,000 in a country of 3 million people, you got 10% of the entire population of the country marching down the capital city, and they've been doing so for 9 nights in a row now.
I didn't realize Albania was so small. Yeah, Houston has more population than Albania. So
yeah, no, it's very small. And I mean, 3 million, I think, is like the last estimate, really. But like, there's a lot of Albanians that have just emigrated out of the country because of the fact that, hey, it doesn't, like, the circumstances aren't that promising for prospects. And it speaks volumes, I think, for how fed up people are. So it's so inspiring to see, man. It's just all young people, and it's so peaceful, and like the vibes are so good. It just, I don't know. It's been really fun to just follow along, like feeling part of a much bigger sort of movement. And it's just inspiring to see young people just fighting for their future. I think this is the problem in North America. It's like people don't do this. But at the same time, as I think about it more deeply, people in North America are so divided in the sense that their cultural identities are from where they came from. And so it's very difficult to get those kinds of numbers in North America. Versus here, it's like a true sense of patriotism in the purest sense of the word. And anyways, I'm off sort of my spiel on that. Was really cool to see. Hope it continues. Hope there's actually some positive change that comes as a result of it.
Let me tie that in with like the AI and data center stuff. So there's been a lot of protests. Like there are a ton of protests in the United States, but like relative to a lot of European places, I don't know if it's because you guys get more time off or what, but No, there's other factors, but there's a similar sort of understanding that a lot of people's concern or frustration with AI. And if you look at surveys, surprisingly, America, outside of healthcare, is the most skeptical of AI implementation out of any Western country in the world. And that just, it seems backwards. But yeah, we are in an echo chamber. And a lot of people have said it's just because they don't feel like that AI has benefited their lives or will benefit their lives. And so if somebody is approaching AI and they're saying, hey, this is going to cost my kids their jobs or my job, and it's going to be something that will just benefit the elite from all these investments. Some people's approach has been, hey, it's a great thing that Anthropic and OpenAI as well are going to be public companies so that people can benefit. Trump is, of course, talking about in a conference this week I don't think he's going as far as nationalization. It is something that Alex Karp, the CEO of Palantir, thinks is possible if the LLMs proceed in the way that Dario has done with Anthropic, that there will be some nationalization. I hope not. I don't think that will. But he is talking about buying a public stake in the LLMs, and that would be one of the ways that people could benefit. But I actually think it's more simple than that. I think it's kind of like with the resorts in Albania, where young people are like, hey, there's this ecological area that I'd like to preserve for myself, my grandchildren, who knows? And instead, elite people are coming and buying it. Albania is not for sale. I don't see how this benefits me. And I think that a lot of people's approach on AI is not so much that on the investment side that they don't benefit, because there's tons of ways to have played this, even outside of SpaceX and OpenAI. But the bottom line is, I think because a lot of people are tied to the Apple ecosystem, like maybe this is taking it like one level too far. But like if they're tied to that and they're not vibe coders, they're not like being forced or are using it at work. They're just like my parents. They're boomers. They're awesome people, and they're not technologically adverse. They actually do use AI, but most of their friends that are their age that are boomers do not touch it, do not use it. They barely interact with it, or they're fearful of it. And so I think that like having more of those very easily accessible integrated consumer applications where you don't have to download a separate app, like with Siri, and hopefully it is good enough, I think that might be enough, as long as people are like, hey, this is actually great, and they realize that it's AI, it's not just Siri, or like, hey, Apple did it again, then that might actually make AI not only more accessible, but also that the benefits are more tangible, then there's less protests as a result. You think, is that too crazy of a theory, or is there something to that?
I don't know. The one piece I'll add there is like in the case of Albania, I genuinely don't think it's truly about the resorts. I mean, like that's what that's like the headline, and that's the overall vibe of what they're pushing back on. But I think that after so many smaller injustices, like this was just a straw that broke the camel's back, that it was bound to be something, because this feeling of dissatisfaction had been built up for a long time. And so like, yeah, sure, the resort is the spark, but I think a lot of the ammunition was building over time. So I can't say the same, I think, for a lot of the protests, for AI or whatever in the States, because like there's so much funding that goes on behind the scenes to try to, push a certain narrative, or maybe
Yes.
so these like disagreements, push a bill, whatever. Like it doesn't seem pure in the sense of the word, versus I think the thing that my experience that was so moving here was that like it felt pure, especially because the audience was young, like students and whatnot. It felt really genuine, and the numbers spoke for themselves. And so it could have really been any spark. Like it was bound to happen, I think. Anyways, we can move on. Travis, go march and hold up a SoFi sign. I mean, yeah. Was I the only 50-something in the protest? Probably.
I almost said, I was like, were you the only guy with gray hair there?
Dude, it's yeah. apparently it's like the new dating thing. Like you meet people at the protest. Like that's like the hot new thing. That's like a cool way to, how'd you meet?
That
Oh,
is.
like you met at a protest. It's like
How I Met Your
cool.
Mother.
Yeah, like you don't get to say that anymore. It's like, oh, we met on Hinge.
Yeah.
Okay. Why did the market just drop? It's after hours.
It's
low
flat.
volume.
Yeah, there was a brief drop, but it's low volatility. I wouldn't read too much unless there's like a significant move. Like if you see an index fund move like 1% up or down, that's significant for an index fund. But yeah, it's flat.
Anyone look at DT, competitor to Datadog?
I had to look it up. I hadn't heard of it before, so no, I've not looked at it. Datadog is a really high quality company. I don't know about this, so even if they're in the same space, you have to make sure you have the same culture, same execution.
Yeah. All right, we got to talk about this one, Roy. Wow, Wix, $49 a share. What the heck is going on, man?
Yeah, I guess this is to keep Manuel humble, because this is also a Manuel play. Maybe the only thing he's ever gotten wrong in the stock market. Not really, but yeah, it dropped massively. They basically issued a SEC document, and companies will do this when they realize before they get to earnings, like, hey, our guidance was way off. Now for them, it wasn't like insanely off, but this is still a pretty big drop. So they expect, this is the exact quote, company expects an approximately 50 million reduction in bookings and an approximately 25 million reduction in revenue in financial 2026 as a result of our organization realignment, as well as a more pronounced slowdown beyond our previous expectations in growth of our partners' business during the second half of May and early June. A couple of weeks ago, I'd talked about, Wix. Basically, the way that the play works is this. They bought Base 44 for a very cheap valuation. They have shifted some of their personnel and marketing. I'm sure you guys have seen a lot of their marketing budget in play to help accelerate and grow Base 44 and also integrate that in the system. So whether you want to vibe code your own website or you want to use the Wix tools, and there's overlap as well with Wix Harmony, they're able to do that. And there's some cost to that. And so Base 44, it's growing massively at the same time as the mature business, which is Wix, the website builder, is slowing. And, I was like, hey, I think Base 44, if it wasn't for Base 44, I would not be interested in Wix, but I am. And so that's going well. So I don't think the thesis is broken here, because I do see that question for S-Crun as well. But there has been some slowdown in the business. And a few weeks ago, 2 or 3 weeks ago, they talked about this in a fireside chat meeting. And they also mentioned it in the earnings call. And I had some investors push back on me, and they're like, well, it's not actually slowing, and the mature business is actually growing nicely. And like, that's not what they're saying in any of these. You need to listen to what the actual shareholders are saying, not just look at trailing numbers, but also at forward numbers and guidance. And here, even there, though they had factored that in, they talked about this as well previously, this is a bigger drop than was expected. And so I think that this just feeds the fear. Like, Base 44, I guess some people push back on Base 44, like, hey, it's great, but it's not differentiated. And there's a lot of these in the market. I would argue that there's a significant TAM, and something like a Base 44, there's going to be multiple winners, and Base 44 will be one of those. But the question is whether the mature business ends up decelerating much faster than Base 44 is able to accelerate the business. And I don't know that that'll be a fully resolved question, for the next maybe 4 quarters or so. Base 44 is still very small, even though it's growing faster than expected. So it needs some time to play out. And I think that this is something that people have their eye on. Now, part of the reason for the slowdown, too, is, again, that shift to priority for Base 44, and they ended up deprecating some previous products and everything. But that's not a 50 million thing. And so the other note that they included was they did lay off 10% of their workforce. 1,000. Is that right? I've got one of the numbers wrong. I don't know if it's 20% of the workforce and it's 1,000 people, or if it's 5% and it's whatever it is. They laid off a good chunk of their workforce. Double check me on that. I know it was 1,000 people. And so there will be some cost savings for that. I hate it for those that are impacted, but when you have a mature business that clearly doesn't need to employ as many people because you're decelerating, it makes sense. Yeah. So what I'm doing, like, just to answer that question more succinctly, and I'll try to do that in the future for the Q&A here. It's just a hold for me, even though it's at a really low valuation. I don't have a large position. I'm just gonna let it play out because I think that the thesis is correct and there's material upside, but I'm not certain enough to put more money in it. And at the very least, it's probably we're looking at least 6 months till we really get a good indication of which is true.
Yeah, I mean, it still hasn't found the bottom yet. It's still down and to the right from a technical perspective as well. It's really interesting, right? Because they were buying stock double what they are right now, and now you're on 50% discount from where you were buying the stock back.
Yeah.
Begs the question, like, hey, you have the runway, like, go buy back more stock,
Well,
there is
they
gonna
took
come a
on debt to do that, and I don't know. There's enough shareholders that like me that typically don't like doing that, borrowing against future earnings that may or may
it's
not come.
convertible debt though, right?
Yeah, it is.
It converts at like what, 120, 130?
I'd have to look back at
Something
it.
like
It was before I was a shareholder, so yeah.
Yeah. So my point is like, look, base 44 is very small. Yes, it's going to grow. Yes. And there's going to come an inflection point where Wix is going to become a base 44 story. I mean, that's the reason why Manuel invested and Roy and many others. The market just doesn't see that yet or doesn't value it yet. And like, that's opportunity if you have the patience and if you think the narrative is going to change. It's getting really interesting. I check Wix all the time because I'm like, should I get in now or not? Like, I almost got into the 60s, and I'm glad I didn't. But yeah, CoreWeave, Wix, these businesses, like, still at a discount, even though they both have AI exposure, right? Wix through Base 44 and CoreWeave, obviously, the entire business model, but they're both trading at a discount, right? So it's not like every single name that has AI exposure is going up. Wix is a little bit of a different one, right? Because it's both getting disrupted by AI and being the disruptor. So, all right, we got a lot of Wix questions, so I'll consider all of them answered. I don't think the thesis is broken just yet. We obviously have to look at more earnings and see how that base 44 growth goes, and obviously what the core business is also doing from a growth perspective. I think last quarter was like 11% higher. So, do you think Amazon's going to cross 300 this year? Absolutely. I think that's going to happen, Diego. I think 100% it's going to happen.
I think probably not.
Oh, do tell. 300?
Yeah, 300.
Dude, it was like
currently
at 280 like last week. What are you saying?
It's 245. The reason is because of this capital raise. I would have said yes previous to this. I'm like, well, maybe they have enough. And looking more at the numbers, again, $200 billion that they're building out in capital expenditure. We looked at their free cash flow. It's actually negative because of the build out. But if you look at the actual earnings and everything, they have to raise. And so that's going to come from one of two sources. Things like that they did today and previously in March with the euro, or as the share price rises, like if Jassy is looking, or whoever's in charge of this is like, hey, we're trading at like 285 or something like that. Or even if like, I don't know. They could get to 300. I just don't think it's going to hold above 300 for long. They're going to look at it as an opportunity, I think, to raise. And there's a lot of raising that they need to do over the next couple of years.
Yeah. Do you guys have any exposure to AI-related power companies? Start a large position at FPS, but curious about other companies who can benefit from the data center AI energy bottleneck. Great question. Neither of us have energy exposure AI specific, although Bloom is interesting.
Bloom, of course, was one that has flown a lot, and a lot of people are like, hey, is it too late? I don't know on that one. Yeah, it's a huge bottleneck. I see a few questions around this as well. And it's one where I need to do a little bit more due diligence. I entered Venture Global in part just because I'm like, this is kind of like where inference is, where the demand is so ridiculous and through the roof right now that there's so many data centers and so many like pivots of like Allbirds, which is a shoe company, becoming a data center company. Like, you know, that there's a little bit of a rush there. power is the next bottleneck, and of course, a lot of names have run because of that. Some have run in speculation as well. But like, is there a very specific focused trying to capture the AI opportunity energy play that I'm in? No, not right now. There's a few that I'm looking at, but it's too early, and it's not an area where, at least some of the types of plays where I have a great deal of familiarity. So I need to just be a little bit careful there.
Yeah. I think that's going to be a topic we continue to talk about more and more as time goes on, Roy. What is it about Meta you dislike? I mean, you've talked about this more, but if you want to
censorship and social media being caustic for young people.
Thoughts on new at these prices? Yeah, new, like let's spend a minute talking about new, because holy, talk about it.
Yeah, it's gotten beat up, and there's really one really valid reason and one not valid reason at all. And I'm going to have a longer article come out in the next 2 weeks. I'm not sure if it's going to be the next one or the one after. Probably the one after that I'll do on South America plays and opportunities, including Nubank and Mercado Libre and a few other names as well. So the name-specific thing that I think doesn't matter at all. The CFO left. It was a planned exit. They brought in somebody that has a lot of experience here in the United States, worked for Visa for a long time. Like, you look at his resume, absolutely impeccable, no concerns there. And Nubank is moving in the United States, so it makes sense for them to hire somebody like that. The other thing that's weighing on them is Brazil's economy, which they're basically the Bank of Brazil. They, of course, are launching and have been launching in Colombia, Mexico, and will be in the United States as well. But the Brazilian economy is a lot more cyclical than it's an emerging economy, developing economy. And right now there are fears of the Super El Nino event, a high probability that happens. Usually when it does, it changes the weather pattern substantially there. So areas that usually get plenty of rainfall suddenly are going to be in drought, and so crops won't do very well. Areas that are a little bit more dry and arid, they get a lot more rainfall and flooding, and so crops don't do well there. Now, the one crop that is doing well, and they actually are planting a lot more, so I don't think that the impact is going to be too bad for them, is soybeans. But there's a lot of concerns on if there is a Super El Nino, which looks quite likely, that it'll negatively weigh on that economy, which if you're the bank, the largest bank by far that dominates that space, it has an impact on you depending on how that economy is doing. And so if you look at GDP estimates, I think it's a 1.3 to 1.6% growth, which is a downturn for them. It's not negative, but it's much slower than what's expected a couple of years out and what was there 2 years previously too. So I like it. I would just not necessarily say, hey, I'm going to buy it here and it's going to double in the next year. It could. And the Brazilian real is moving in the right direction against the US dollar. But yeah, the Super El Nino is a real bearish argument that I think is valid.
Yeah. I'm not investing in new.
I did see somebody ask, like, are we only in tech stocks? And I'm like, well, I have Nubank, I have Venture Global. I've mentioned them both. And then outside of that, yeah, pretty much.
We're both in VG because my shares didn't get called away yet. So.
All right.
Guys, how do you see SpaceX IPO playing out, especially as in helping the other space stocks? And how about liquidity, knowing that Trump Coin did what Trump Coin did on Inauguration Day? Yeah, look, I've said this before multiple times now leading up to this, that I think SpaceX IPO is a sell the news event for space stocks around that have caught a bid over the past several months. I could be totally wrong, but we've seen SpaceX even partially suck the liquidity out of the market. And I think that's going to continue. Maybe we get one more big drawdown this week. We'll see how the market trades on Friday, quite frankly. But I think it's going to be more pronounced for the space names. And a lot of take profit events, I think, are going to happen. So that money can rotate into SpaceX. I also think Tesla is going to see some liquidity drawn from it for investors to invest in SpaceX with some of that capital.
Sure. Yeah.
And why is Amazon down? Because of the news we just talked about. Do you have a timestamp on that, right?
Yeah, go back to the 8-minute mark. We talk about the debt raise that they did, the unsecured senior notes.
Yeah, so just check that out. What do y'all think happens in the market with SpaceX on Friday? Like, I think the market's going to be red on Friday.
I think it'll be green. Usually IPOs perform quite well, and I think there's so many people that think it's going to be red because of SpaceX. I like the other side of it. So I guess I'm just a contrarian today. But yeah, I don't like, I think maybe the week after is when we'll see not only SpaceX continuing to fall, but also maybe the market will soften a little bit. We'll see. Do you think this, we didn't really answer the question in the your stream name, rally continues or dead cat bounce? What do you think?
I think rally continues for sure.
Yeah.
Interestingly enough, Roy, like we didn't talk about geopolitics at all today, and we had some roller coaster events on the geopolitical front. Any thoughts there?
The market has continued to shrug off most of those events for the most part, and that's a great thing as investors. Now the scary thing is there a scenario that emerges that it no longer shrugs it off? Yes. And if we have Hormuz essentially closed, I think 10 ships per day we're going through last I checked this weekend. That's not a good thing for inflation, and it has a lot of impact. But yeah, I think that the rally has legs. Like we could have some chop or some consolidation for a little while, but I don't see anything like meaning that we need to have a full correction or anything. It would be healthier if it's not all Micron that's increasing the market cap of the index funds, but it's kind of the environment that we're at. What it felt to me like, and I did I put out an article this weekend on it too, where typically when you see the markets and stocks will move on a narrative more so than fundamentals. It just will over the short term. Long-term fundamentals do tend to win out, but those big volatile moves, it's just pure narrative. And the market on Friday was a market that for the most part, outside of maybe one thing, was a market that was just looking for a narrative, not the other way around. And when there's usually an environment where there's just a mixed narrative, that there's not one that the market is really sinking its teeth in, usually that is a short-lived movement, whether it's to the upside or downside. So yeah, I think that we might have some chop, but I don't think we're going to have like a big pull down on Friday or before then.
We'll see.
Watch it be 5% down tomorrow again. I hope not.
We're, of course, going to be covering the SpaceX IPO and talking about the market in general on Fiesta Friday, which is 6 p.m. on Friday. And I should be fine for that. I don't think.
Yeah, I'll be covering it live some throughout the day. I'm off on Friday with Evan's team, Stock Market News, Wolf trading as well on X. So I'll be in and out all day. It's going to be fun. So whether you're playing it, whether you're in it or not, like the reason why people are in it or interested in it is it's the largest IPO ever, and it may hold that title for a decade or more.
Yeah. I think Robinhood is penalizing flipping SpaceX. I think they have a 30-day hold, or I don't think it's 9 days. We covered this last time.
We looked it up on Friday. I'll have a video on SpaceX IPO stuff. But yeah, whatever platform you're on, the number of days is different. The length of the penalty is also different. I think it's 30 days, but double check me on that.
I think it's 30 days as well. That's what I remember. Will SpaceX surpass Amazon's market cap on IPO day? It's very likely, yeah. I think it could. I mean, 2.6.
That's a crazy thought, man. That's a crazy thought.
Dude, how? Yeah. Okay, hold on.
No, it won't. 2.64 trillion for the market cap for Amazon.
Yeah.
I don't think so. Like, even if it improves 20, 26, 30%, which isn't crazy, actually gets pretty close. Oh, man.
It's 30% higher Amazon than SpaceX. If they IPO at 2 trillion and they climb by 30%, that's Amazon.
That's a wild thought. That is a wild thought. Man, it's not crazy either. Like IPOs tend to, especially when they're hyped, that first day they go up. There was a study that I was reading that came out that looked at IPOs over the last decade, and it had some interesting numbers. It'll be in the the
So
video whenever I make that.
here's the, I haven't checked it today, but there is a secondary market. I think it's a hyperliquid one. Before the Friday pullback, SpaceX was already trading, Roy, for 177 or 178 on the secondary market, like literally on Thursday. I don't know what it's trading for right now, but there's your 30% right there and then some.
Yeah.
Like it's I wouldn't be surprised if this thing, I mean, I don't know, maybe it's going to be a massive sell the news event, but I wouldn't be surprised if we are more than 30% up on day one. Will be fun to watch for sure.
Yeah.
How should I underwrite an investment on Amazon into the future? Ops, cash, operating income. Do we think the multiple should compress becoming more asset heavy? Thinking for 28 spreads. That's a good question. I know Matt has a lot of great content on his Amazon thesis because he thinks it's going to go to $1,000 per share. 10 trillion, I think, was his thing by 2030. If Matt's in the chat, he'll let you know. But there's a
I
whole
would take the under of that, but yeah.
Yeah, or 2035. I don't know, but there's a whole thesis behind it that he has. Yeah, look, I think one overarching question that we have for all of the hyperscalers is what is the ROI going to look like on their CapEx? Because so far we've had one of the shoes to drop, which is them announcing big CapEx. We don't necessarily have good visibility on what does that look like from a payback perspective. And I think commentary on that should help you determine Amazon. Like all the hyperscalers are going into investment mode, right? With spending so much to try to capitalize on AI. And in large part, they have the distribution networks to be able to benefit from it. And they have the large platforms. So in the way that I'm approaching it is okay, what are they going to do in CapEx? What is the probability that they're going to return that CapEx within that same calendar year? What's the payback period? And what's the thesis overall? The good thing with Amazon is they have a lot of green shoots with regards to robotics, ads, the Tranium, AWS, so many different business lines that they can plug in AI and it be accretive.
Yeah, and of course robots are coming behind that. And that would be what I would be interested in Amazon more for is that cost control. There's a tremendous amount of CapEx. One of my favorite ways to look at mature companies like this that are still growing well is a price to free cash flow. You can't use that right now though, just because the CapEx is so significant. Now, if you want to control it or remove CapEx from that equation, you still can. But there's a lot of ways to look at that. I wouldn't necessarily think the multiple needs to compress that much more, but it might take the market a little while to understand what they're building is not wasteful, that there is a plan, and it will bring value.
Yep. Google doesn't have access to Apple data, do they? Asking since they pay that fee to be the primary browser. My thinking is that they just don't know the data about app usage. Yeah, I don't think Google has obviously they collect data when you go onto Chrome, but they don't really Apple is super privacy conscious and they're sort of they're allowing users to block what data users share with other apps. So I think partially that's beneficial to Apple's ecosystem as well, because they're the ones that have all of this data that connects with each other. Facebook has a very specific kind of data, Google has a specific kind of data, but Apple sort of has a little bit of everything. It has my text messages, it has, payments that I make through the Apple Card, it has what apps I use, what screen time I have, all of this other stuff. So I think it's very powerful in that perspective. It has my calendar. Yeah. Anything to add here, Roy?
Yeah, they shouldn't have access to that data.
With BMNR rapidly approaching 5%, what are you looking for them to do once they finish accumulation? Further accumulation, share buyback, more moonshots? I'd prefer not a dividend.
Pay off the small amount of debt that they had. It'd be great if they just had a clean balance sheet. If or really when we're in crypto spring and summer, and they're trading at a multiple above their 1-to-1 MNAV, then look for using that to acquire more Ethereum. I'm fine with them adding more. Very selective on moonshots, and moonshots should remain a very small part of the portfolio. If it ever becomes like the main thing or main thrust, I will not like that. I don't like the two current moonshots anyway. Mr. Beast one's okay, I guess, but yeah. But beyond that, yeah, share buyback if they're trading under their MNAV. I haven't looked at them today. I know they're up quite a bit, but yeah, it's they need to be meaningfully under their MNAV. Although if they were just doing small amounts of buybacks, that would be fine too. I think that the accumulation rate will slow down. I'll be surprised if it doesn't. Although if they're trading above their MNAV, it's okay. What I won't like though is if they're like, hey, we're going to go to 10% and we're going to use debt to do that. I think that's dangerous.
Yeah, SpaceX would be half of NVIDIA if they like that would be crazy. Yeah, back to the BM&R thing. Did you see the latest news today, Roy? They bought 127,000 ETH tokens, which is their biggest purchase in a long time. And they just like blew their entire cash position. They're down to like 250 million on cash, which is also equally crazy. I honestly want them to keep accumulating past 5%, maybe not as high as 10%, but like I think 7 or 8 seems like a pretty reasonable place to go. And I don't know that there is a very strong justification to not do it, because on one hand, you lock up more Ethereum, which is good for your bull thesis. And on the other hand, if you think Ethereum is going to go to 26,000 or whatever, like, wouldn't you want to buy it at 1,500? Why? Like,
yeah,
what
but like
investment can be that much?
And I'm fine with that, using like cash that's in the bank, what they're actually getting, just using that to hold on to more Ethereum rather than selling it. But like, if they're trading under their MNAV, the only solution is either break their word and dilute shareholders at that point. It is dilutive, or go into debt or some other similar venture. And I don't prefer that. They already will have a lot of Ethereum. They're already positioned very well for the next leg up when we do have crypto spring and summer. But yeah, are you comfortable with them just saying, hey, we're also going to go into debt now for this too?
I mean, they're already doing that, man. Like, I'm kind of desensitized at this point.
Well, it's so small though. Like relative to, and I've got the other article that I'm working on is focused on the digital asset treasuries and where they're at right now, if there's anything fundamentally wrong, and where they're headed for in the next crypto summer as well. But with MicroStrategy, like they're not going to go bankrupt, barring some crazy price action on Bitcoin, much lower than where they're at right now. But that is the risk of the debt model, is that there is still a chance. Now, Ethereum is fundamentally different because it's a yield-bearing asset, just because of the staking revenue, the Made in America Validator Network. And so as a result, there's always going to be money that's coming in. They don't have to sell Bitcoin to be able to repay the debt, like barring making some revenue from lending Bitcoin or some other applications. Like at some point, they'll need to do that with strategy. I would prefer, as long as if they're taking on some debt to get 5%, fine. But if it's a meaningful amount that'll actually look to exceed the revenue that they have from staking, that's where I'd be like, hey, this no longer makes sense. But yeah, the good news is, like, to get to 5%, they're very close. They don't need to raise, if they have to go the debt model, they don't have to raise much debt. And I'm fine with, that to get over the finish line.
Yeah, I mean, a part of me wants them to do more moonshots to diversify them away from just pure ETH. And then another part of me is just like, dude, if you're going to do a moonshot, like, go into Anthropic, like, just swim with the current, go with where the market is rewarding right now, not necessarily. But like, I don't know, man. I think there's gonna, like, the thing behind Mr. Beast and Orbs was for them to essentially be synergistic in the future from a product offering perspective, and largely they haven't showcased that at all. So I don't know what's going on there. I'd love to see more. I think we're just a little bit starved for information on BM&R. It's just like, hey, just trust Tom Lee. And it's like, well, great. How's that worked out so far? And by the way, that's me saying that to myself. All right. Rob is asking, do you guys keep your portfolios, bank accounts on multiple platforms? If so, why? I think this question came up last week as well. Yes.
I use Webull and Robinhood, and it's just mostly for redundancy. There's some other reasons too, but if one platform's down and I need to make a move, I could go with the other. It's rare when one is down and not the other, though.
Yeah, I use one platform which has like no fees, and it's like integrated with everything. It's like an all-in-one type of platform, which is really good. And then I use another platform. I use Interactive Brokers for my wheeling portfolio, which is they have fees on options, but they also have like way better fill rates. It's just more professional overall, more options for me to invest in. So I like that. I'm not against consolidating, but I think like once my primary broker gets more features, I would probably consolidate. Tevis, are you going to risk being labeled as a flipper when Anthropic or OpenAI might come into the market? Yeah, I don't know. Like, I still have the open order for the SpaceX shares. It's only 100 shares. I should have probably, if I was only going to do it once and be banned from further IPOs for my broker, I should have probably done it with more than 100 shares. I'm not interested in OpenAI or playing it on day one. Anthropic is the other one, but Anthropic would be like a buy and hold type of situation for me. I could probably do that on another account though. And like other than that, I don't really care about any other IPO for me to play it on day one. Like I'm not that excited. So like that's how I'm gaslighting myself into doing it anyways. It's like, okay, well, let's just say SpaceX opens up, pumps, I sell, make a profit, get banned from further IPOs. Then I have another broker with another account that I can do Anthropic, and that's it. Pretty much. But it's like on 100 shares, let's just say it's up 50%, like that's $8,000.
Yeah.
What happened to Tesla stock after IPO? I don't know. Did an IPO in like 2001, 2004?
2010. And it didn't go anywhere for years. But yeah, I'd say SpaceX is in a fundamentally different place as a company than Tesla back then.
Yeah. How does Tevis have so much vacation while being an exec? Dude, I was working all day today. I don't think you understand. Like I put in 8 hours, 9 hours of work every single day. It's almost 2 a.m. my time, by the way, Jer. Like it's 1:44 a.m. my time. Like I gotta wake up early tomorrow because I gotta run errands, and I haven't made a lot of videos, but maybe I'll make a NBIS video tomorrow around lunchtime, and then I start work at like 3 p.m. and I finish work at like almost midnight. Is NBIS a steal at 220? Long term, if you want to hold it, sure. I don't know about a steal, but like
steal is the wrong word. I don't think it's bad, like long term, but yeah, it was under $100 3 months ago, so that was a steal.
Mm-hmm. This works in between protesting. Yes.
Yeah. Tanner works between spa time. You work between protesting. I just work.
Yeah. Roy, do you think Figure is getting hit from rate increase fears?
It's getting hit from two different angles. One is just it's associated with crypto, even though crypto has very little to do with anything that they do. Like it has a ton, but like the price of crypto has almost no impact, is what I'm saying. But it's still caught in that basket and it's being treated that way. So that's the biggest thing, I think. The other is rate increase fears. Now, the funny thing is they've launched and they've talked about this being the year of first lien. If you watch the interview, you'll see what that means. They aim to be the next Fannie Mae. And there's a chance that they make meaningful inroads in that. But the housing market, the mortgage market is largely dead. I think that they'll still do okay there, but until rates soften and weaken, or there's something else that heats up that market, that is not going to be like the best product ever, especially if rates increase. But you know what product really does well when you have a kind of stagnant real estate market and rate increases happen, Tevis?
What's that?
Home equity line of credit. And you know what their biggest line of business is? HELOCs. So
Yeah.
the market, I don't know, it's missing it. Now, to be fair, go to that interview, see what Michael Tannenbaum said about HELOC positioning and figure. Like he's like, hey, this is not our future. This is just where we started. So even he would be the first to say, like, yeah, even if it's a great environment for HELOCs and they'll do well, like they'd prefer that there are conditions that help grow the other products. But yeah, I think it's a very good opportunity here for the long term. Short term, honestly, maybe until the fourth quarter, there'll be some chop. I'm now looking at the point of buying some leaps.
Yeah. That's interesting. Okay. That's interesting.
I've not bought leaps on anything in a long time, Tevis. Yeah.
Yeah. So if you didn't own any of these three between Wix, CoreWeave, and Figure, if you didn't own any of them and you could only buy one, you'd buy CoreWeave. That was a quick answer. Okay. That's agnostic of time frame?
Yes.
Okay.
Yeah, Figure. I think Figure is going to do very well. I think Figure will probably outperform CoreWeave, but there's more risk to it. With CoreWeave, and like actually Figure could like dramatically like destroy estimates and just like be a ridiculous if they're able to move into that Fannie Mae market. Like, look at what Fannie Mae does, how much they do. Look at what they're able to do, especially for the first liens that are under $300,000, guys. Like, no one is going to compete with them. And the great thing is they don't have to. They have the platform right here. And for fractions of what they currently spend, they just use Figure Technologies for that back end. Like, it's a beautiful, beautiful thing. But there is more risk there. And there are a lot of macroeconomic factors that are weigh on that versus inference demand is just so crazy. And CoreWeave has the most.
Yeah.
Whether I don't see a scenario, any scenario, like zero, where there's not tremendous acceleration in their business. Why? Well, let's say that there's a nationwide moratorium, no more data centers can be built out. You know what that's going to do to CoreWeave, Tevis? They're going to do very well because they have under contract a lot of stuff, but some of the stuff that they've actually built out, they don't have under contract. They'll be able to sell that at tremendously higher values than where they're at right now. It's just a supply-demand economics. Let's say something comes out that ends up dramatically reducing the need for tokens, that there's a pushback against token maxing. Jevons paradox comes into play. There's a lot more use cases than previously before. They already have the take-or-pay structure. Maybe they don't need to take all that, and some of those are renegotiated. Regardless, another great environment for CoreWeave. Let's say, like, hey, that this is something that's so critical to national infrastructure that the United States says, let's take an investment in it. Which one are they going to do that in? CoreWeave. Which one is based in the United States by far the most? CoreWeave. Let's say something happens to NVIDIA. NVIDIA ends up, Taiwan is invaded. Hope that doesn't happen. Terrible, no matter what you're investing in, like it's just bad. Guess who is first in line to get NVIDIA products? CoreWeave. Like, these are terrible situations, and the reality is, it's hard to look at CoreWeave and be like, oh yeah, they're going to do worse. Like, no, like I'm telling you, dude, it's such a freaking easy buy right here. Like, that's the thing in my mind. That's the only thing that's holding me back from, like, I have some money coming in the market, and I'm like, do I put that into buying leaps on Figure? Because I'm really bullish there, and I'm excited. Or do I just buy more CoreWeave and maybe even some leaps? I don't know yet.
Roy, the interesting thing about all this is you're literally on the tape saying Figure 20x, and meanwhile you'd buy CoreWeave, which
like I would not say that's a base case scenario that Figure becomes Fannie Mae, becomes the platform where all this is running through for first liens, but I mean, it's not a 0% probability. Like, I don't know what the probability would be, but maybe I'd say like 10%, 15%. Now, if they do that, or they make any meaningful inroads in that, and they will make some, tremendous, ridiculous, stupid upside, and it's great. But it's going to take time, and this is not the current environment where that's going to take off. CoreWeave, like, there's a lot of companies you can look at. Like, let's take, I don't know if you remember DNA. What do they stand for? Let me, DNA stock. Ginkgo Bioworks Holdings. Kathy Wood was very bullish on this. Shyam Sankar sits on the board, as part of Palantir. This is one where people are looking at this and they're like, hey, this is going to be a great opportunity, and it's got a small market cap and everything. And they've had to do a number of reverse splits, and you can see here it's down 98% over the last, of overall time. Like, terrible performance. I never have touched it. I didn't buy the thesis at all. But this is one of those where if the thesis proved out to be right, if they executed, this is one that would have been like 100x. But if you have a play like that, that's like 100x or 20x, there's got to be some risk. Versus like CoreWeave, is there a scenario, like how likely of a scenario is it that 10 years from now, CoreWeave is a 10x? I would say a decent chance from here, like a pretty decent chance. And you might say, well, that's going to underperform X, Y, and Z. Fine. I will take a 10x in 10 years anytime I can get it, especially when I look at it, I'm like, man, I have a hard time seeing any scenario at all that they are not able to have tremendous upside from here. I don't see it. It won't go up in a straight line, but man, I'll take I'm kind of one of those investors where this is one of the reasons why the bond market is so important, that there's a guaranteed rate return unless you're expecting the United States government will blow up or civil war or something weird. But like, as long as you don't expect that, you're like, okay, guaranteed return of whatever. And as that whatever gets higher and higher, let's say the bond market was at like 11%. You would have very few people saying, you know what, I'm going to invest in stocks. Because 11%, I mean, it's not amazing. It's very good, though, as a risk-free return. And you have to price in the risk. So, yeah. But yeah, no, CoreWeave, man, I'm telling you. It's... What scenario is out there that's plausible where it doesn't do well in the future? I'm not talking about like next week. I'm talking about over the next 5 years.
I mean, here's my whole thing about it. Like, I don't disagree. I just... As you're saying all that, what's going through my mind is all this exposure onto one concentrated, sector bet. Because, like,
Yes.
for me, for example, I'm let me just check for you, but 40%, let's call it, 40% in NBIS. If I take another 10%, let's say, exposure into CoreWeave, make it in, let's say, my fourth largest position, it's like, dude, that's half my portfolio riding on just this bet, right? So that's the piece where I'm like, yeah, like, I agree with Nate here, and I agree with what you're saying. When Nate is saying all neoclouds 10x from here by 2032. It's like, guys, I get it. But that's also with a little bit of recency bias because of where we've traded for the last 6 months and what we've seen from a demand profile of the last 6 months. I just, I don't know that the next 6 months is going to be as good as the last 6 months from a price action perspective. Maybe it might be. Maybe it might be better. Hell. But the point is like, we've already run a little bit, like, from the time Manuel started talking about NBIS to now, it's a 10x more than that, right? And that's not even that long ago, right? From the time my first investment into NBIS into now, it's like a 4x. So I don't know. That's the whole thing. Nate says, I work in agentic enterprise. We are so early. Our customers are still just understanding what agents are. Work at a Fortune 75. That's oddly specific. What's 75 on the Fortune list?
I think Nate was transparent on where he was working before, but I guess I won't say it just in case. But it was, now he's at a different company. I don't know which one that is, but the one that he's with, I would say, yeah, a lot of those customers really don't understand agents and what they're for and how to use them, and it's probably not the best offering anyway. And even there, Like it's still bullish. But yeah, I agree with you, Nate. I think that there's a lot of upside. It's not just CoreWeave, but CoreWeave is just one where it's like the only scenario that I see, but like everything, literally every read in the market, and every single day I see headlines that indicate that the opposite is true, is if things get way too excited, way too overbuilt, and supply dramatically overextends above demand. But where things are currently in the build out versus where the demand is, especially with protests slowing some things down and supply chain stuff too, I would say that's less than a 1% chance. And that's probably the most realistic actual bearish thing that would hit CoreWeave and others as well. So.
All right, man, I'll buy some CoreWeave. Jeez, give it a rest already. I'll buy it. Convinced.
Yeah, maybe 100 shares a figure too, just for the fun of it. It's like it's one where like I see Robert's question. If you want to throw it up, what do you think about figure at these prices? Yeah, it's very attractive. It was where I think my lowest buy was at 27. So and I was buying it up to 35 quite happily. I think it might take some time to play out, but if you're a buy and hold type of guy and let them execute, watch them, make sure that they're doing a good job on it. But man, it's kind of like the CEO has said that Mike Cagney was saying that we can't double forever. And Michael Tannenbaum, the CEO, is like, well, so far we have doubled forever. They won't do that forever, and I think maybe like this next year they won't, depending on how first lien goes. But rapidly growing, positioned very well, and they benefit materially, not just from crypto, but also AI.
Jared says the switch from Nebius to CoreWeave was a 180. Even Tanner won't stop.
It's like the funny thing is like Tanner at the same time, like we hadn't talked, and then I think you and I talked about CoreWeave, and I was like, man, it might be time to like take this one seriously, and I did. And then about that same time, Steve and Tanner were talking, and Tanner was telling him about CoreWeave as well. And I'm like, okay, it's interesting when you have people that you respect and you value their opinion, and they get excited about the same time as you. It's like, okay, I like that. That's happened a lot of times actually. So sometimes it's they get excited first, and then I'm like, well, maybe I'll pay attention now. That wasn't the case here, and it wasn't the case. Like he wasn't listening to me and like, yeah, maybe I'll think about CoreWeave. So.
Yep.
But inference is just obvious.
Yeah, for Nebius, Nate says, I don't think Nebius is overvalued at 50 billion, maybe based on right now numbers, but not if we're talking just 18 months from now. They'll be doing legit 22 to 25 billion in ARR, 2 times ARR without accounting for subsidiaries. It's going to be really interesting when we actually see what their guidance is going to be once they raise it, their ARR expectations, and maybe provide a little bit of color on 2027 numbers as well. I think that is something that will be a big push up for Nebius. At the same time, like I think the margin compression for Q2 that they warned about is something that might catch a lot of investors off guard, even though it's like baked in that they talked about it. So. All right, let's continue with our questions. I don't understand how our questions don't move downwards. I just keep bookmarking.
Yeah. No more questions, and I'll try to be quicker. I know I'm the worst offender there.
Roy, I'm in a good mood today, so we can go a little bit over. It's I don't feel as tired as previous days. But Roy, did anything from NVIDIA GTC Taiwan give you concerns for Air? If I remember right, they mentioned being able to test chips and reduce chip defectiveness.
So the automated testing equipment, it's not like one person that does all parts of that. And so we talk about like really far upstream, which is like early in the process, really far downstream, which is dominated more by Advantest and Teradyne. Air is all the way upstream. Now there's a lot of different solutions that are all the way upstream. Air is unique in how that they do wafer level testing, which really wasn't done previously at all. They are the ones that do wafer level testing. There is one company in China that does it because they literally stole the product from Air Test Systems, and then Air sued them, and then they countersued, and like it's the way that the Chinese markets play out, and that'll eventually be decided for Air. And it'll just be a penalty, and they'll have enough time to like change their whatever. No, these guys have been in the space for like as long as I've been alive. So in wafer level testing, I think that there's some products where you can look at and be like, well, yeah, there's some advantage here. But I think a lot of what's happening in the space, there is no other solution upstream. And that is absolutely the right way to help with throughput and to help as far as to catch that bathtub curve of infant mortality for a lot of these units. So there are others that will absolutely be in this space. There's a lot of other great companies there too. And they're going to be further downstream than air. But yeah, they're fine.
There's some good questions out here, Roy. I know we said we're not taking any more questions, but there's some goodies here. So I'm going to ignore them and we'll keep going.
I thought you were going to say, I'm going to ignore you.
No, I'm going to ignore them and then we'll see how we feel at the end.
Ooh. We'll each be allowed to pick one more. The question on CoreWeave and debt and interest rates from Hunter.
CoreWeave. We've talked about CoreWeave for like an hour.
No, that's a great question. That's the one that I'll use my veto power on. And you have one that you can pick from your. Yeah. So do interest rates potentially going hurt CoreWeave due to the amount of debt? Existing debt, no. Those are fixed. If they need to raise in the future, yes. Like they had to raise at junk bond levels, 7.5%, already high. So that level would be higher. Where it really hurts them is as their revenue improves and the revenue to debt ratio improves. A lot of times companies that are in this space, oil and gas companies that have the take or pay contracts, they're able to get higher credit ratings. And so then they go and look at their debt and they refinance it for a lower amount, which is immediately EBITDA profitable. And then you can basically use that to do the Dave Ramsey, that snowball thing. That is hard, if not impossible, if there are rate hikes.
Yeah, Harry, if you take a shot for every time Roy talked about CoreWeave, you'd be blacked the fuck out. But
what if you bought a single share every time I mention it? Then you'd have a lot of shares.
You'd be rich. A question on this though, Roy, like they're fixed. Is that fixed for the entire term, or do they have the possibility to like renegotiate lower?
That's only if they want to refinance. Otherwise, those rates are locked. So, okay. Yeah, if I'm wrong on that, please let me know, guys. I'm like 99% confident on that. So,
yeah, we should call you Dr. CoreWeave instead of Dr. Crossroads.
Well, let me just say, like the last time I was this excited as far as a buying opportunity, it was Air Test Systems. So, it's not going to do like a 5x, but this year. But
dude, I got to buy this now. That's a bold statement, Roy. Air Test Systems made me a lot of money. So. And a lot of people in the chat a lot of money. So I got you into NBIS. You can get me into CoreWeave. And
yeah, it's the same thesis. Like 5 years out, it's a little different because of the NeoCloud. But like right now, it's the same.
All right, let's see. What is the cheapest Mag 7 in order? Okay, Meta and Amazon are at the top. Google is at the bottom. Microsoft is somewhere in the middle. I would say Apple is closer to the bottom than to the middle because it's more overvalued than not. But yeah, that's the list. I would say like Meta, number 1, Amazon, number 2, Microsoft, number 3, or NVIDIA and Microsoft, number 3 and 4, and then Apple and Google, number 5 and 6. Wait. There's 7. Who am I forgetting? Are we counting Tesla? Tesla's at the very bottom. Tesla's on the list.
It has to be. I was gonna say, yeah. I'll just say I largely agree with you. The Q&A period, so I don't want to go like super long on there. But yeah, Tesla's in a realm of its own, then Apple, and then you can mix up the other ones, and I wouldn't be too bothered. Meta is probably the cheapest.
Yeah. Yeah, NeoCloud Wkly. We should actually do this. Nate, let me know if you're also down, and we can do this. Just joined. Not sure if you guys talked about it. If not, what's your thoughts on BMNR? Yeah, we did talk about it. Just rewind the video. I say that like it's a VHS. Figure near its lowest lows. Yes, it is. Do we think we're going to break 25 on Figure, Roy? What do you think?
It could. Depends how much more downturn there is in crypto, even though it doesn't really impact the business at all, or very, very slightly. it's caught in that basket. So I think there's a little bit further to go in Bitcoin, and Ethereum perfectly nailed the prediction I had on the price back in December. But yeah, probably not too much lower.
Google more overvalued than Apple. Time to call it a night. You need sleep. Dude, Google is like the only Mag 7 that's trading at like all-time high. I mean, sure, Apple has no prospects, so I get where you're coming from. But, I mean, that's fair, I guess.
I would say Google's more attractive than Apple for sure. It's not close. But yeah, that was like the one I was disagreeing with the most, and I'm like, I'll just be quiet.
All right, let's continue here. How are people AI adverse? I don't understand. People can use AI as a tutor and try to hone their skills. Yeah, dude, people can do a lot of things, but people don't because people are fucking stupid and they don't apply themselves because they're lazy. And so that's going to also translate in AI as it's translated to the internet, as it's translated to, personal calculators, as it translated to books. Like, people have all the information at their disposal. They just don't use it for a variety of reasons. That's not novel to AI. People don't like change.
Yeah. Like the other big part is what might happen to jobs. And I think there's very valid concerns, not so much with AI, but with robotics coming behind it, the dual wave of the impact for jobs, a lot of disruption there faster than the market can create new jobs. I don't think AI, if it was just AI, not robotics, I think we'd be just fine. But I understand like people's concern with that. Like if you went to college for something and you've been in the field for like 4 years and then OpenAI comes out with their product and you're like, oh man, I may not have a job in 5 years. You're not going to be like, hey, this is awesome. I've got an app on my phone that helps me look up stuff and research it better. You're going to be very unhappy. And a lot of people are in that bucket.
Yep. And a lot of people were unhappy without AI. So whatever they can blame, right?
Yeah.
Should Wix be buying back more stock, or should they be out there with their money trying to acquire new companies like Base 44? Bro, if you can get another Base 44 at that valuation, it like anybody in their right mind should take that. I will lever up and take that myself. But you can't.
I'd probably 5x my position if they did something like that.
You can't. It's so like that time has passed. It was a moment in time and it's passed. They should be buying back more stock because Base 44 is mispriced within their assets. Intriguing picks and shovels. We talked about the power efficiency bottleneck from your last question. I'm not sure if this is a repeat, but any picks and shovels on
I'll give this person one to research. I won't tell you too much about it, but it's Navitas and VTS. I've swung traded before. I don't have a long-term position. I don't have anything right now, but they're very well positioned with gallium nitride. Do some research on it. They're interesting. They've gone up, but they haven't exploded, and they may be worth a look.
Not financial advice. Thoughts on Amex? More opportunities elsewhere. Amex is a good, consistent, reliable compounder. Pays a nice, healthy dividend. I don't hate Amex at all. I think their business model is dominant. They're gonna continue to grow. I owned them for a while in the dividend portfolio before I spun that down. Yeah, not against Amex.
I'd probably prefer MasterCard first and then Visa over Amex, but yeah.
Really? MasterCard and Visa over Amex?
Yeah, they're more platform plays, and they position themselves really, really well for agentic commerce and stablecoins. Like
they're also like way, way bigger.
Yeah. And like that's really important with the commodity, like stablecoin, to really leverage the most benefits. So like they know what they're doing. I'm not investing in any of those, but like if I had to between those, MasterCard, Visa is really close. So like you could go either way. Amex is less of a platform play. So
yes, we're still live. I said Meta number 1 and Amazon number 2.
Nvidia is number 1 for me, but I don't want to beat the dead horse.
Mag 7? I'm sorry, what? The cheapest Mag 7 Nvidia at like $208 or whatever?
Yes.
What's NVIDIA? Yeah, 208. It's not the cheapest Max 7 Pro. Meta's
look at their
freaking
2-year
fast
forward.
per air over here at $580, bro. You're saying NVIDIA? Really? If it was
Look
at, yeah, I'd be like, all right.
Okay. Let me just throw this up. We'll look at numbers instead of whatever you're basing on, which is fine. Like it's not wrong to do different things. So let me I don't know why I have Nubank down here. I guess I was looking at the wrong thing, but this is the 2-year forward price to earnings ratio. And like you said, Meta is stupidly cheap. 16.2 forward price to earnings. You can look at where they've been previously as well. Yeah, 16.5 for NVIDIA. It's crazy. Nubank shouldn't be on there. It's not Max 7. But yeah, there's a lot of good values there. Not so much Tesla. Like even Alphabet. Like it doesn't look crazy or bad at all. Now, I think a lot of these are going to change just because of the CapEx, depending on how the ROI, what products they release and everything. But yeah, NVIDIA, it's too cheap.
I don't disagree with that. I just don't think it's cheaper than Meta is. But whatever. Like agree to disagree. Yeah, Tanner yelling at the screen watching this right now. Yeah, he would be definitely voting for NVIDIA.
I'm proxy Tanner today, I guess. I'm like talking about Nubank, CoreWeave, and NVIDIA. So we've not even like talked on a stream in like months. It's weird.
All right, next question. Getting carried away here. Yes, we talked about Buminar. If the market gets used to the war and higher oil prices, shouldn't the market explode when an Iran agreement is actually... Dude, who knows at this point? Like, bad news is good news is good news, bad news is bad news, all right? It's one of those things. Next question.
Probably a lot of it's priced in, but I think we would get a one-day pop for sure.
What do you guys think about the bear Anthropic OpenAI thesis that LLMs will become commodities? Interesting.
That's correct. I've said that since 2023, and I like they'll have a other value added layer, like they both do, but they ultimately are commodities at the end of the day. But commodities absolutely still work if you have size, you have scale, you can actually leverage them across a lot of different ecosystems, and there's tremendous demand. And both of these guys are winners because of that. So like I wouldn't think of that as a bear thesis. Like it's reality, and it's why I never was interested in investing in OpenAI. Why I have been with Anthropic is just their positioning is so good across enterprise, and I think that they'll continue that lead and dominance. And it's kind of like a neocloud versus bare metal for the inference stuff, or a payment service provider versus you're doing the fraud prevention and stuff. Like what you build on top of it matters too. And I think Anthropic to date has demonstrated substantially more value there. So, yeah.
Yeah, once Jensen signs more boobs and all. Dude, this was the local top. I hope you know this. Like literally this day was the top. And from there, NVIDIA, this was like last year, right? Last like September or something.
It was before I was a shareholder, yeah.
And he did this, and literally this was the day of the top. So just so you know, okay, when stuff like that happens, you sell. It's a sell event. And now Jensen's coming out on stage like a freaking rock star. He's throwing the first pitch at baseball games, and he's telling you what companies to buy. Like, bro, I mean, I don't know. I don't know if it's a top or not, but you do with that as you will. All right, let's continue. What's a good entry for CoreWeave? You can talk about it yet again, Roy.
I've been buying last week and this week too. So look at the price range that we've been in. I think it's a buy here. It's not financial advice. Make sure you're comfortable owning it, and make sure like don't follow me in a trade just because I said it. Like you can look. We have the next question, the last question on BMNR. Like that one, I'm upside down on. I think everybody is. The hat is upside down for a reason there, but. I'm still optimistic on it. It's still playing out a little differently, but kind of how I expected in the worst case scenario. And And yeah, so do your own due diligence, make sure you're happy and comfortable with it, holding it, and then buy accordingly. But yeah, me personally, I think it's extremely attractive right here.
Can we not end the stream on BMNR? Like, that's just such a yucky way to send me to sleep.
Well, you answer this first. I'll answer it, and then you pick one last question, Tevis. But guys, you can. This is your time to ask crazy questions, off the wall, something like Tevis will probably pick something like that. I don't know.
Knowing Tevis would probably pick something like that because Tevis is a fucking degen. But don't ask crazy questions.
So you go first on this, and I'll give an answer, and you'll pick one last question.
All right. So where's the path forward with BMNR? Curious if I sell, but it would be at a loss, of course. I mean, look, what I did, again, let me throw up the banner for this one. This is not financial advice. This is just what I did and what I would probably do in my situation is I sold a third of my position at a loss, tax loss harvesting those losses, and then put that money into spread out a couple of different things. I also put it into SoFi Leaps, the large chunk of it that was remaining. Booked like a 45-50% loss on that 1/3, sitting on the rest. I'm kind of conflicted, right? A part of me, and I talked about this in the last video that I put out yesterday or 2 days ago, was like, should I sell another 1/3 and then just buy Leaps here for 2028, or maybe when the 2029s come out in like August or whatever, just buy those? Because if it doesn't go up by that time, then it's been dead money for like 2 years, 2.5 years. At that point, for me, I'm like, all right, well, if it's dead money for 2.5 years, then it's like I've already lost that money in my brain, right? At the same time, the other thought process is like, all right, well, do I just hold or do I sell and just buy something else? Overall, the reason why I pulled trigger on a third of the position was just to reduce the exposure because I'm not as confident in where we are right now in the cycle. I'm still confident in the long-term thesis, but just where we are right now in the cycle, I just saw better opportunities because other things are also trading cheaply. So that's just me. All right. I'm still holding to a majority of my position, but yeah. Roy?
Making a note. Yeah, my next BMR video will be the reverse of what I did in December when we were in good times. Like that was what was the worst case scenario, which is largely played out. And again, we hit the price target of Ethereum, a little bit higher than the ultimate low on BMNR that I expected, but we might still see it. I think the reverse is true on the upside. I entered this play as a long swing, expecting and giving at least 2 years to play out so we could fully accommodate a crypto winter. It's played out exactly like that. Upside is, if you look at where traditionally strategy and also previously BMNR, although it was in the crypto bull cycle for just a short time there. And I wouldn't read like too much from like that really extreme peak for when they first mentioned the pivot, but you could usually expect to play like in the middle of a crypto bull run to be about 1.35 to 1.4 times the MNAV. And so in essence, you can think about with the Ethereum versus BMNR equation. I have Ethereum, I'm not selling it for BMNR. I have BMNR, I'm not selling it for Ethereum. BMNR, I will sell on the way up. Hopefully there is up. Otherwise, it'll help me with taxes. But I expect it to outperform Ethereum relative to where we're at by about 40%. And I think there's material upside for Ethereum. I think it'll put in another all-time high. Not within the next year and a half, but we'll see a lot of that shift, I think, by Q4.
By the way,
but yeah, like it's not wrong to take losses. It's not wrong to tax loss harvest. If you have higher conviction where somebody else is, it's fine to rotate. Tevis has done it recently, and I think he's going to be happy he did that. 4 months ago when I was buying, NBIS, when I was buying some of these other names that were newer for me, I did mention at the time I sold some, not a lot, but like maybe 20% of my BMNR position, and it was like at 33, and people are like, "You're going to regret it." I'm like, I haven't so far, but I also wanted to keep some because I didn't think it'd fall this far at that point. It has. Yeah.
So actually, one question I did get from a viewer on Instagram of all platforms, which by the way, if you're not following me there, follow me there. Links in my profile. But I did get this question, Roy, and it was a good question. I didn't have a good answer for it, but basically I pitched the idea of going in BM&R leaps at this level for 2028. And his question was, how do you think about leaps versus just buying BM&U? And I mean, my standard answer is like, oh, well, I don't want to buy the levered BM&R option because of the decay. Like the drawdowns are harder than the upswings. But at the same time, it's like, if it's against leaps, like, how do you think about that, really?
Why not buy leaps on BM&U?
Okay, don't tempt me.
Be careful with those, by the way. That's like double leverage. I don't know. Like, I hadn't thought about that. Like, on the surface, there are some differences. There's not like as much difference as you might think because there is theta decay for both. They're both leverage bets. Yeah.
All right.
I'm
So
just
you don't
happy
have a
holding
good
the
answer
stock.
either.
Yeah. No, I would just buy it. Me personally, like I'm just buying and holding the stock. Yeah.
All right. Cool. Y'all need to end early so we can watch the Knicks win tonight. Yeah, Elizabeth, we're running 20 minutes over. And we're gonna end right now on one question. There's a couple of good ones. Actually, I'll just answer all of them real quick. Am I a secret agent for the CIA equivalent of Albania? No, I'm not. That sounds like that would be cooler than my current job. When am I getting a green card? When an American decides they want to marry me and like be hitched with me for whatever reason, for the rest of their life. Did I find a date to the wedding? No, dude, this wedding, I'm going to go alone and I got to give a speech and I got to get harassed by older relatives all night about how and why I'm going to be doing a lot of drinking. Let me just put it that way. But thank you for the question. Appreciate the concern. Thank you, Elizabeth.
Thanks, Elizabeth.
And we will see you guys on Friday to break down the SpaceX IPO with all of you. Really appreciate all of you guys joining, and have a good week. Hopefully many gains between now and Friday. Thanks again. Goodbye.
Bye, guys.